1. How tariffs are impacting business prices. 2. Rising prices ahead. What businesses are telling the Fed. 1. How tariffs are impacting business prices. Are you ready for the impact of tariffs on your wallet? The Federal Reserve has reported that businesses across all 12 of its regional districts are grappling with higher costs due to tariffs, and many have decided to pass these costs on to consumers through increased prices. According to the Fed's July Beige Book, which provides a snapshot of economic conditions across the country, many firms passed on at least a portion of cost increases to consumers through price hikes or surcharges. For those companies that chose not to increase prices, profit margins have been squeezed, and the report notes a growing sensitivity among consumers to price changes. This trend is contributing to the rise in inflation, as seen in the Labor Department's Consumer Price Index, which jumped in June, partly due to the tariffs. President Trump has implemented a 10% general tariff, along with specific tariffs targeting China and certain goods. However, the country-specific reciprocal tariffs have been temporarily halted until August 1st as trade negotiations continue. In June, import prices inched up by 0.1%, but were down 0.2% compared to the same period last year, according to the Labor Department. This figure was lower than what economists had anticipated, largely due to a decline in energy prices. But here's where it gets controversial asterisk. While some argue that tariffs are necessary to protect domestic industries, others believe they unfairly burden consumers and businesses. What do you think? Should tariffs be used as a tool to address trade imbalances, or are they doing more harm than good? For more on this story, check out Tobias Burns' detailed report on the Hill. Welcome to the Hill's Business and Economy newsletter, where I, Eris Folly, bring you the latest news at the intersection of Wall Street and Washington. Essential reads. Stay informed with these key business and economic news items. Meta investors and CEO Mark Zuckerberg settle $8 billion lawsuit, a major legal victory for the tech giant. Senator Lisa Murkowski criticizes White House budget chief. Senator Murkowski calls out Russell Vought for his stance on the annual funding process. Median weekly wages rise nearly 5%. Good news for workers, as the Bureau of Labor Statistics reports a significant wage increase. The ticker. Keep an eye on these upcoming news themes and events. Republicans face deadline for foreign aid cuts. They have until July 18th to pass a package of about $9 billion in proposed cuts to foreign aid and public broadcasting funds. In other news. Expand your horizons with these additional stories. Trump administration tightens review for renewable energy projects. Solar and wind projects will now undergo a more rigorous approval process overseen by Interior Secretary Doug Burgum. Good to know. Catch up on business and economic news from other sources. S&P 500 hits new record high. Boosted by strong earnings and positive economic data, the S&P 500 closed at a new high. Americans delaying retirement due to financial concerns. A study reveals that financial worries are causing many to postpone retirement. U.S. retail sales fluctuate amid trade uncertainty. Retail sales data shows mixed results in a volatile trade environment. That's all for today. Stay tuned for more updates. See you tomorrow. 2. Rising prices ahead. What businesses are telling the Fed. Businesses sound alarm. Price increases looming by late summer. As we approach the latter part of summer, businesses are raising concerns that consumer prices may soon begin to escalate at a faster pace than previously anticipated. Although consumer prices have not surged as much as many experts have predicted, this trend is expected to shift in the near future. The Federal Reserve's Beige Book has indicated that as tariffs become more entrenched, price increases are likely to follow. Many businesses are experiencing rising costs overall, with some opting to sacrifice their profit margins to accommodate these tariffs. Currently, the impact of tariff costs on American consumers has been relatively muted, but experts warn that significant price hikes could be on the horizon in the coming weeks. In its latest Beige Book economic report, the Federal Reserve revealed that businesses surveyed reported either modest or pronounced increases in costs due to tariffs. The report stated, Contact and a wide range of industries expected cost pressures to remain elevated in the coming months, increasing the likelihood that consumer prices will start to rise more rapidly by late summer. Interestingly, the July report mentioned tariffs 75 times, a decrease from the 107 and 122 mentions in the previous two reports. However, this is still a significant increase compared to the 23 and 49 mentions earlier in the year, prior to the onset of the trade war initiated by President Donald Trump. While earlier discussions primarily revolved around uncertainties regarding policy and interest rates, the current focus has shifted to the impending price hikes as tariffs become more firmly established. Manufacturers, in particular, have reported that their suppliers are imposing surcharges, especially for raw materials essential for manufacturing and construction. Several consumer packaged goods companies have informed the St. Louis Fed that they expect their cost increases to start appearing on grocery store shelves within the next 90 days. A manufacturing firm based in Memphis has already raised its prices significantly to counterbalance the tariff costs associated with steel and aluminum. Other businesses in the St. Louis area are adopting various strategies to manage their costs. For instance, a packaging company has absorbed at least 10% in surcharges to remain competitive against larger manufacturers, while a wellness center has introduced new add-on services to offset rising costs in other areas. While many businesses have opted to pass these increased costs onto consumers through price hikes, others have hesitated due to the sensitivity of consumers to price changes, which has further squeezed their profit margins. So far, these new costs have not been dramatically reflected in official data. Retail sales have continued to show strong performance, and prices have generally remained stable. The latest consumer price index showed a modest increase of 0.3%, which is significantly lower than the initial concerns expressed by some economists. However, the stability of prices may not last much longer as tariffs and the associated concerns begin to influence pricing strategies. A construction materials supplier shared an insightful observation with the St. Louis Fed, stating, "It seems that prices have gone up out of fear that prices will go up." In a recent development, the Trump administration has sent tariff letters to nearly 24 trading partners, threatening to impose duties as high as 50% starting August 1st. Notably, none of the 4 existing trade agreements with the UK, China, Vietnam, and Indonesia have resulted in tariffs below 10%, indicating that the baseline tariff established on April 2nd may be a long-term fixture. What do you think about the potential for rising prices? Are you prepared for the impact of tariffs on your everyday expenses? Share your thoughts in the comments below. Asterisk, asterisk. Asterisk tariff. Asterisk Trump tariff. Read next.